Shalom, Goyim. Well, today is January 20th, 2020. The markets were closed today due to Martin Luther King Day, so there really isn't a whole lot to talk about. But we have an interesting week ahead of us for the economy. We have earnings coming out tomorrow. Netflix, IBM, American Express. All of those, IBM and American Express, of course, are in the Dow Jones. And then on Wednesday, you got Johnson & Johnson, another Dow Jones company, along with Discover. So 2 credit card companies. And then you have on Thursday, we got Intel, another Dow Jones company. And then Capital One Financial, another credit card company. And on Friday, after the market closed, you have PayPal reporting their earnings. So an interesting week for the markets. Going to be interesting to see if the Dow Jones climbs higher. Is it back below 29,000? I don't remember. I think it broke it, and then it fell back below it. What are the futures trading at? Oh God. Ugh. Okay, so it is. Wow, it's almost 29,348. It's down to 100 points, though, in the futures. So it'll be interesting to see if it keeps going up. We're in the bull market. No, I don't know. These credit card companies are going to be kind of interesting to see what their earnings are. If people are still spending money on the credit card, who knows, though? You know, maybe the consumer is tapped out. They don't have any savings. They're turning to the credit cards, and the credit cards are making more money. So, it's tough saying right now. But, we do a little screen sharing here. Let's do some screen sharing. No, that's not it. That's what am I looking for? Okay. Now, so, we have American Express. We got Comerica, Halliburton, IBM, ITW. I wouldn't be surprised. You got Netflix, of course. And then you got Johnson & Johnson. And then you got Intel, Capital One, Abbott Labs, and PayPal. Interesting week this week. So, of course, one of the largest weighted companies in the Dow reporting their earnings is going to be Johnson & Johnson, and then IBM, and then AXP, and then, of course, Intel. Intel's going to be reporting their earnings. Interesting week for the Dow. Economic calendar. Existing home sales this Wednesday. 2 days from now. Tomorrow's going to be Tuesday. The day after that, we got home sales. And if you look, the past few months have been rather rough. December 19th, we were off. November 21st, we were off. And October 22nd, we were off. So, past 3 months, existing home sales have been rather sluggish. I think we're going to see to continue this trend. I think that's one of the reasons why they're bailing out the repo markets. It's because the collateral is all in mortgage-backed securities, and the banks don't want to hold it. The hedge funds don't want to hold it, and they're getting the Fed to buy it off of them. That's what's happening, Goyim. Don't buy a house right now. People will tell you, oh, the interest rates are low. They're going to go lower. You're going to be getting paid to take out a mortgage soon. Don't buy that. If any of you schmucks go out and buy a house right now, you're not listening to me. Okay? Be smart, Goyim. Okay. With that out of the way, we're going to talk about reserve rights token. So, I wrote an article on it. You can read the article. It's in ShackelsteinPost.com. The article is about reserve rights token. Now, reserve rights token is a project. It's called Reserve protocol. Now, it's created by a fellow Jew of mine named Nevin Friedman. And what the idea is about is it's about a stablecoin backed by a diversified pool of assets. I start off the article by explaining kind of what Libra was trying to do. So, what the users for Facebook would do to buy a Libra token is they would take the dollars and they would buy a Libra token. And so Facebook would have this Libra Foundation that would collect all these dollars. They'd collect tons and tons of dollars, millions of dollars. And then they would take those millions of dollars and then they would go out and they would buy bonds. And it wasn't necessarily treasuries, it'd be equities, it'd be any type of asset. You could be buying precious metals, you could be buying Swiss francs, you could be buying Japanese bonds. So you take the dollar, you convert it to a Libra, and then you convert it to a pool of different assets. And the U.S. government is kind of worried about this technology because it undermines their currency, the dollar, which is only backed by one asset, that's the U.S. Treasury. But the only problem is Facebook, of course, in this Libra project is going to be highly centralized. And do you really trust Facebook? I mean, come on. They've been having a lot of controversy lately with privacy issues. And that's why people in the crypto community that know a thing or two are quite excited about Reserve protocol. Now, Reserve aims to decentralize the process, not having a management oversee it. And they're using smart contracts. They're going to be using oracles. They're going to be using chain link oracles to sync up the price of the asset. I saw Nevin. He was in a photo with old Sergey over there. So you can read the article. I posted on Sheckelstein Post. It's up there. But in order, the reserve, so there's the reserve stablecoin, and then there's the reserve rights token. Now, if the reserve stablecoin is backed by a diversified pool of assets, be it Bitcoin, Ethereum, Monero, other stablecoins, other assets, gold, silver, these fluctuate in value over time. So that it's going to be hard for it to maintain its stableness if all these other different assets are moving around. So what they're going to do is they created another token called the Reserve Rights Token. Now that is an arbitrage token. So you can use it to either burn it when the stable coin goes up above 1, or mint more when it goes below 2. So you can create more in order to stabilize the price of the token, the price of reserve stablecoin. They use the reserve rights token to participate in arbitrage and keep it at a stable price. I hope that explained it. I don't know. It's kind of confusing. But all you need to know is that as this protocol gets bigger and more assets get accumulated underneath, reserve rights token is going to be a big money maker. Big money maker, Goyam. Which is why you have all these big hotshots, Peter Thiel, Sam Altman, Coinbase Ventures, invested in it. And it's rather low right now. It's been at like 20, 22 cents. Reserve rights token, of course, is the stable coin. That's the joke. Because it's been at 20 cents for like 3 months. It's never moved. I only IEO'd on Huobi Global. And it hasn't gone anywhere since. So, with that being said, it's hard to buy. You could also look at SimpleSwap.io or Pionex. Upcoming events would be the Venezuela app. They're rolling out the app in Venezuela. I downloaded it once at one point when they initially released it, but then you couldn't do it no more because I'm not in Venezuela. Obviously. I just took a poop in my bathroom and I had toilet paper. So, and then the major exchange listing, they need to get it on some other exchanges if reserve rights token's going to go up. I don't think they're going to list it on any major exchanges right away. I think they're waiting to roll out the reserve app, and over time, they already rolled out a very simple app that you can take 3 stable coins and make 1 reserve. I think they're going to want to roll out more of an app and then put the reserve rights token out on the major exchanges. I don't think they're going to want... It's not a money grab. It doesn't seem like a money grab. And the mainnet RSR functionality at some point this year with the arbitrage. So I think this is going to be a big project for 2020. You know, it's currently at like a $6 million market cap. So, I mean, you can see a 20x, maybe even a 40x. That is if Bitcoin continues it doesn't completely go off the rails and drop to like $2,000-$3,000. I think we're looking at a good year 2020, Goyam. Good year. All right. Well, that's been today's episode with Mordechai. I hope you, Goyam, heed my advice. If you're gonna... Where's my mouse? So, take care, Goyam. La tatita. Over and out.